Be Wealthy and Smart, episode 1184.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to explore, will the Fed raise interest rates next week at their meeting? There's a lot of debate over whether they will or they won't, but the futures market is showing a 75% chance of a quarter point increase. The other 25% are in the camp of no hike happening. So we'll talk about what's going on and share some different viewpoints with you from some influential people. Now, first of all, we all know that the Fed is trying to bring down the rate of inflation by raising interest rates. But as I've been talking about, raising interest rates has a lag time, and the Fed really hasn't given a whole lot of time for those interest rate hikes to really work. On top of that, a rate increase would come just over a week after other regulators rolled out an emergency lending facility to halt a crisis of confidence in the banking industry. So the timing of this rate increase could be really off. According to Mark Zandi, chief economist at Moody's Analytics, this might be one of those times where there's a difference between what they should do and what I think they will do. They definitely should not tighten policy, he said. Now, what's really interesting is Goldman Sachs is one of the most high-profile forecasters that sees no change in interest rates happening because it expects the Fed in general to adopt a more cautious short-term stance in order to avoid worsening market fears of further banking stress. While that might be the prudent thing to do, we're not sure that's what the Fed is going to do. According to Doug Roberts, founder and chief investment strategist at Channel Capital Research, he said they have to do something, otherwise they lose credibility, they being the Fed. They want to do 25 and the 25 sends a message, but it's really going to depend on the comments afterwards, what Powell says in public. I don't think he's going to do the 180-degree shift everyone's talking about. Well, I agree with him that Powell isn't going to do the 180-degree shift right now unless the data calls for it. If the data comes in substantially weaker, then yes, he'll have to consider that new data. Or if we have a black swan event that comes out of the blue, such as another bank collapse, that would also cause a 180-degree turn. But just on the information we have right now, I agree with him. There's no evidence that the Fed will do any kind of a pivot right now. It's looking quite likely that 0.25% hike will go through. Mark Zandi at Moody's also said people are really on edge and any little thing might push them over the edge, so I just don't get it. Why can't you just pivot here and focus on financial stability? Well, he has a good point. I mean, it wasn't long ago that Silicon Valley Bank and Signature Bank were closed, along with news of instability with other banks, and financial markets have been rocked by this. And people have been more fearful than I've seen in a very long time about what's going on in the banking sector. So this is not actually going to instill a lot of confidence to raise rates another 0.25%. Zandi also said it's highly unusual and dangerous to see monetary policy tightening under these conditions. He said, quote, "You're not going to lose your battle against inflation with a pause here, but you could lose the financial system. So I just don't get the logic for tightening policy in the current environment." I happen to agree with him, and I think the prudent thing would be to give these interest rate hikes some time to kick in, to see if they've worked. Waiting a little bit longer after such a recent banking crisis probably makes good sense. Things are not as stable as they could be right now, and you don't really want to rock the boat with an unnecessary rate hike when you could just take a little bit of time and observe what's going on and get fresh data coming in. Bank of America economist Michael Gapin, said the recent market turbulence stemming from distress in several regional banks certainly calls for more caution, but the robust action by policymakers to trigger systemic risk exceptions is likely to limit fallout. That said, events remain fluid, and other stress events could materialize between now and next Wednesday, leading the Fed to pause its rate hike cycle. Well, that's true. Anything could happen, and if the data comes in that doesn't support a rate hike, I do believe the Fed will pause in that case. But it's data-driven, so it's really looking for some reason to not do their hike this time. Otherwise, I think the hike will go through. One important thing to realize is there is a market expectation that after this current interest rate hike, they're not pricing in further rate hikes. The current pricing indicates a Fed funds benchmark rate in a target range of about 4% by year end, and if they increase next Wednesday, that would put the range between 4.75 and 5%, substantially over what the market thinks rates will be at the end of the year. We also have to be conscious that a recession could occur because of all of these interest rate hikes. According to Zandi, if they raise rates, that qualifies as a mistake, and I would call it an egregious mistake. He said the recession risks will go meaningfully higher at that point. So while the futures market is pricing in a 75% chance of the Fed hiking rates, we'll have to see what happens between now and next Wednesday, and if any data comes in that's meaningful that may allow them to give some time to pause. What's interesting is that many experts think it would be a good idea for the Fed to pause and not go through with an additional increase. So we'll see what happens, and I'll be reporting back to you as we hear what the Fed does and as they tell us their thoughts in their commentary at their next meeting next Wednesday. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.